Hello everyone, welcome to another video with Professor Choi. I made a few suggestions on previous videos on what you should be buying, and then I realized that there might be some people out there who might not be able to identify the correct Market Spyder ETFs to purchase. So I'm going to guide you today basically on how to pick a good Market Spyder ETF that fits your needs, and again, why is this a good idea? If this is why is this the sort of like best way to invest? All right, so if I was just screening for a good Market Spyder ETF, then basically I would just Google it or search it. So Market Spyder ETF, and then of course at the top you're gonna get people who are looking for you to buy their funds because they make money every time you buy their particular funds. So you have all these different spiders. Okay, so you could purchase those, or you could come over here and say, okay, well let me look at a list. So let's take a look at this one, for example, ticker SPY. Now, in other videos, I've used Yahoo Finance. I use it because I'm used to it. By the way, I've been using it now for more than a decade. But there are plenty of other places where you can look for this. So anyway, let's look for this ticker, SPY. SPY basically is an ETF that tracks the S&P 500 and also has fairly good volume. So it's not a bad idea to buy that one, for example. All right. So if you live in the United States, these are the largest indexes that we have. So you got the S&P 500, which basically has the largest 500 and so companies in the United States. That basically, if you look at the market cap of the entire market, the S&P 500 covers about 80% of the total market cap of the entire U.S. market. If you look for a spider that follows the Dow Jones, remember, has only 30 companies on it. That's why it's called the Dow 30. And then NASDAQ is basically a index that has lots of different companies on it. And the Russell 2000 is an index that has small cap companies. And remember, the market cap is the size of a company. So S&P 500 and the Dow 30 are going to be full of large cap companies, aka very big companies. And NASDAQ is a composite index, so we'll have everything. And then the Russell 2000 will have small caps companies. All right. And let's just again go for this one called SPY. SPY follows the S&P 500 index. And let's just see what they have. So notice that when you look for it, it says Spyder S&P 500 ETF Trust. You click on it. All right, and right around here, if you click on holdings, it will give us an idea of what's in it. So when you're buying this ticker SPY, you're not purchasing only one company, you're purchasing lots of different companies in one swoop. Okay, this right here is a market sector weight of the ETF. And down here it tells you the top 10 holdings by total assets. And as you can see, what you're really buying, if you buy SPY, about 27% of it is the largest market cap companies in the US. Okay? And of course it has lots of others, but notice that it's just top 10 says here. All right, now one of the things that you always want to look at when you're buying a fund or an ETF is you want high volume. And the reason you want high volume, which is this number here, average volume and volume, is because on a moment where you want to sell it, if it's a low volume ticker, stock, or whatever, then you might be clicking on the sell button and nobody will buy it on the other side. So usually on a bad time, when you need to get rid of it quickly, you won't be able to if you have a low volume. This is an extremely high volume. As you can see, 77 million. Now let's compare that to another company, for example, that I'll talk about in a different video. Bad example. All right, notice again that this other company only has a million volume, which is actually not bad. I've seen way lower than that. All right, but the point is, if you're looking for a good Spyder ETF to buy, SPY follows the S&P 500. It's not a bad Spyder ETF to buy, and it has a really high volume, which this is one of the things that we want. Okay, notice also that there's a yield over here, which usually means that they pay dividends. So you'll be getting on top of the growth of it over long periods of time, you'll be getting a dividend. Now, I learned the other day about another one. The ticker is SDY, and notice that this is a Spyder Smp Dividend ETF, which basically means that it follows the market, the S&P 500, and it pays a dividend. So it is a collection of the companies inside the S&P 500 that pay dividends only. So if you click on, if you buy this particular ticker, SDY, then if you look at the holdings, the top 10 holdings are companies inside the S&P 500 that pay a dividend. All right. Now, as I just mentioned, though, you need to be mindful of the low volume on this one. All right. So basically, this is a fund that you may not be able to sell in the moment of a crash. Now, another thing you want to look at when it comes to funds is this right here, the expense ratio, and this is extremely important because it will basically take away some of your earnings. The companies that create funds, ETFs, which are again exchange traded funds, the way they make money is by basically charging an interest to the fund, and that is explained in terms of an expense ratio. So basically, whoever created this particular fund is managing $17 billion, and then they will charge a 0.35% per year for managing that fund. All right, it could be a team, it could be a person, it could be a fund, a particular company that does this for a living, and so on. But the point is, you have to look at this expense ratio. If it's too high, you probably don't want it. All right. In the particular case of this one, as you can see, the dividend yield will pay for that expense ratio basically by itself. Let's take a look at the same thing for SPY again. Look at the expense ratio of XPY, way lower. And this is normal again for this kind of like automatic funds, because a fund like SPY will basically just follow the market, and it's a sort of passive investing fund where you don't really have to track it, and neither is the person that's selling it to you. Okay, notice that if I was looking at and compare the two that I just showed you, I will go for SPY again because it has a higher volume and there's a lower expense ratio, which will cut again into that yield or that growth that you receive. So, okay. Now, of course, SDY gives you a higher dividend payment. Okay. So, again, those are things to look for. Now, let's look for a different fund. So, let's find an ETF that follows. Okay, right here, there's another one. CDIA. So this is a Spyder that follows the Dow Jones Industrial Average, and it's made up of basically the 30 quote-unquote blue chip stocks in the U.S. stock market, which is supposed to be basically the best stocks in the U.S. stock markets, according to the company called Dow Jones, which is the one that keeps track of this index. Okay, so let's take a look at DIA. Again, the symbol DIA is the Spyder Dow Jones Industrial Average ETF. Okay, so you click on it. Notice it has a volume above 1 million on average, which is what we want. We want high volume. All right, and the expense ratio is 0.16%, which is a little higher than the 0.09 for SPY. It has a yield 1.78, again, which means they usually pay dividends. If you click right here, it says holdings. This is the top 10 holdings, but remember, because this follows the Dow Jones, then basically it has whatever is on the Dow Jones. So whatever is on the Dow Jones Industrial Average, then it will also be here. All right. As you can see over here, by the way, they're showing us other. So if I another IWM, let's check out IWM. All right. Notice that the IWM is an iShares Russell 2000 ETF. So basically follows the Russell 2000. iShares, a company that creates this. All right. So again, a reminder: the Russell 2000 is a small caps index, so it follows companies that are smaller. Okay. So you can see right here, the volume is already 11 million for the day, and the average volume is 29 million. So again, it's a high volume ETF, which is a good thing, as I mentioned, because if you want to get rid of it, then it basically means that there's a lot of in and out. There's a lot of liquidity, is what they call it. The expense ratio is a little higher, again, than the other one that we saw at 0.09. So it's a bit more expensive. And of course, because these companies are small caps, they don't pay a large dividend. Usually dividends are paid by more established companies. So you see a lower yield here on the dividend. Okay, so again, let's see if we can find another Spyder and take a look at it. Okay, notice again, this is a nice list that we just found. Oh, look, if you're interested in buying gold, or gold companies, I guess, then GLD is an ETF that follows gold companies. All right, if you're looking for real estate investment trusts, right here we got RWR. Let's check that out. I'm interested. Okay. So RWR. All right, notice it says Spyder Dow Jones REITs ETF. So we're going to look for real estate investment trust. That's what this is supposed to be holding. All right, yields kind of low for a real estate investment trust, and notice its volume is extremely low. All right, so again, the catch will be, if you have a low volume ETF, it will be difficult to get rid of if you want to sell it in a moment of a panic or something of that sort. Expense ratio is on the higher side compared to the other ones that we saw. You click right here where it says holdings. Notice that it's basically 100% real estate. And these are the holdings inside. So when you buy this ticker RWR, you're buying all of these companies, your top 10 plus more. And every time you buy, by the way, your broker will have to send you something called a prospectus. So you'll be able to read everything about that particular ETF on that prospectus, right? So I'm not interested in that, as you saw. All right, look, these are looks like bond ETFs. So intermediate term, these are bonds. They follow the behavior of bonds. Okay, this is an ETF that follows growth companies. This is an ETF that follows value companies using the S&P 500. So I'm going to go check this one out, SPYV. SPYV. Okay, I like this one slightly better. Look at the expense ratio is extremely low. All right, the average volume is above 1 million, which is what I'm looking for. And you see the holdings. Okay, so it seems diversified. And these are the largest holdings in this ETF. Again, when you're buying ETFs, as I mentioned, you're basically buying a group of stocks. Okay, so whoever manages this ETF, it's basically looking for quote-unquote value stocks inside the S&P 500, and that's what they're holding. Okay, and again, not a bad volume number here. Really low expense ratio, which is what we're looking for. All right, let's take a look at another one. Okay, let's say you're looking for an energy ETF, so you want to buy the energy sector, but you don't want to be buying an individual company. Well, here you go. You can buy XLE. So let's go back and check it out. XLE. All right, so XLE says Energy Select Sector Spider Fund. Okay. Oh, nice volume. Oh, I like that a lot. Right here, average volume 34 million. And expense ratio, it's kind of like on the lower side. Definitely not 0.04%. That other one was really nice. But look, the yield is 4.42, so it pays a nice yield, a nice dividend. If you click right here, it says holdings. Notice that, of course, it's an energy ETF, so it would have lots of energy stocks in it. Okay. Notice also, by the way, that the top 10 companies are already like 78% of the cap of it. So this is really the largest movers, as you can see, of this ETF. All right, so again, this video will be a pretty good complement to the other one that I already made, explaining that that the best way to invest in the market is really to buy a Spyder ETF over long periods of time, and then just do that regularly. Because in the market, it's really not about market timing. It's more about how long you've been investing. Because if you buy a Market Spyder, normally as the market grows, you grow with it. So it doesn't matter whether you buy high or buy low, you're buying regularly. All right. So again, hopefully you like my video. Remember that if you do like my videos, to like the video and to subscribe. And thank you very much. It's been another video by Professor Choi. Have a good one.